So last year, I stood before you and shared some insight around a tiny little country called Singapore. And basically, this insight was around how this tiny country had gone from nowhere in fintech to one of the leading hotspots across the world, and how they had a progressive regulation or regulatory environment, how they attracted risk capital and startups to come to their country. You'll be quite fortunate to hear that tomorrow you'll get to actually see the guy on stage, a guy called Sopnendu Mohanty, who will be here, and he will share more about their journey this year and what they're looking to do next year. So one of the things that I get to do in my role is travel around Asia and parts of Europe, and I get to meet some really interesting and awesome people, as well as some awesome companies and interesting initiatives. And what I want to do here today is share one of the insights that I've been really following very closely over the last 18 months. And it's the concept around the blurring of lines. So you may be thinking, what is this, the blurring of lines? Essentially, it's a trend that I've observed over the last 18 months in which consumers' lives are coming together, whether it's the social element of their lives, the retail element, or the financial services element. And these are being delivered by consumer-centric platforms that cater to the everyday life experiences of the customer. It's about embedding payments and financial services into the things that consumers do every day. It's a lifestyle product, and at the heart of these platforms is data. And you may have heard David talk about that earlier on today, the power of data and how we're looking to harness this for new propositions. But it's about what you do, where you do it, when you do it, and how you do it. And gathering that information about consumers can lead to powerful new propositions. So over the last 10 years, there's been a lot of fuss made about GAFA. So Google, Amazon, Facebook, and Apple, and how that they're going to move into the payment sector and potentially financial services, creating a bit of worry and nervousness for the banks. But to date, all we've seen is a little bit of a foray into payments. So you've seen Apple Pay, you've seen Android Pay, Amazon Pay, and Facebook through its person-to-person transactions on instant messaging. But none of these have really moved the dial yet. And so today, I want to share 3 cases with you which highlights this trend towards the blurring of lines, where a consumer's social life, retail life, and financial services life are all coming together in one seamless way. So it starts off with the giants, as with any good story. So here is a mission statement from a company, and I kind of want to see if any of you guys know who this company is. So I'll just read it out. X is a technology company that brings inclusive financial services to the world. X officially founded in October 2014, originated from Z, founded in 2004, with the mission of bringing the world equal opportunities. X is dedicated to creating an open, shared credit system and financial services platform through technology innovations, and to provide consumers and small businesses with safe and convenient, inclusive financial services globally. Does anyone know who this company is? Don't be shy. Anyone? You're going to leave me hanging. Okay. So the answer is Ant Financial. They are a giant in China. And Ant is a key subsidiary of the Alibaba Group. And they're playing a key role in this trend that I'm talking about around the blurring of lines. They're coming at it from a retail perspective, so e-commerce via Alibaba, into financial services, and harnessing some of the data they get from the retail side into financial services. So here are some of the numbers. They're pretty scary. So 520 million annual active users. And their wallet, as you can see from some of the screenshots, is like an app store for your life, with payments and financial services embedded. So from lottery products to insurance products to leisure, and that's just a snapshot of what they offer. They act as the intermediary layer to the consumer, drawing upon a number of third-party services. And they have, what underpins all of this is a very, very sophisticated technology platform with data at its heart. So here are some of the data sources that Alibaba has access to. It has banking information on consumers, it has business information, government information, and lifestyle information. And through all of this wealth of data, it enables a number of different services. And most importantly, one thing that they've managed to crack is accurate credit scoring, which is now a reality for a lot of people in rural parts of China that have never been able to get into the financial services world. So now that I've talked about Ant and Alibaba Group, it would be remiss of me not to talk about the next giant, which is Tencent, and through their product WeChat or WeChat Pay. And they are tackling this blurring of lines through social media first, into retail, and then into financial services. They have 600 million WeChat Pay monthly active users, and it's a lifestyle product embedded into its social messaging platform. So when I mentioned GAFA earlier, these guys are the real deal, Alibaba Group and Tencent, and they have grown at scale and are blurring the lines between a consumer's retail life, social life, and financial services life. So the next case is all about the rising stars. And most importantly, these companies that I'm going to share with you today are all being heavily supported by Alibaba or Tencent in one way or another. So these two are what I refer to as the new kids on the block. So the first one is Paytm in India. So not as big numbers as Alibaba or Tencent, but still meaningful nonetheless. 200 million registered users, and 106 of those either have active balances in their wallets or they've linked their card to their wallet product. They pivoted their business model in 2014 and moved into payments. And from payments, they've moved into banking very seamlessly. And they offer a wide range of consumer services from gold. So in India, gold is a big thing that is shared and gifted amongst families, and they have a gold functionality in their wallet. They also have cinema ticket functionality, which is relatively straightforward, but in India, there are tens of millions of people that go to the movies on a daily basis. So they've literally moved into that space and offer a lot of loyalty products, as well as kind of offers and very, very few kind of mini programs as well. And incidentally, they've received over $200 million in funding from Ant Financial as well as SoftBank. The next company is Gojek. So they're not as well known as Paytm, but they're moving very, very rapidly. The numbers are a little bit smaller, but they started off as a ride-hailing platform, so similar to kind of Uber, but an Indonesian version of that. And they've moved into household services, leisure, and much, much more. So there was an interesting story about Gojek that the company was, or their products were banned by the government. And then the government realized that if they banned this company, a large percentage of their workers in Indonesia would be unemployed because they rely on Gojek. So they had to overturn that. And that's quite a bit of a precedent that a government's had to overturn a massive ruling like that. And they are expanding into the Philippines, Vietnam, and Thailand. So they soon, in the next 3 to 5 years, their scale should be quite phenomenal. The next one is the national plays. So we've talked about these giants, we've talked about the rising stars. The next case is all about a national play. And this national play is quite close to my heart because it's from my home country of India. So ever since I was a little boy, I've traveled to India every 1 or 2 years. And in the past 2 years, I must admit, I've been completely blown away. the last 2 years, there's been more change than there has been in the last 20 years. And what they've done that has really impressed me the most is this. It starts off with a fundamental layer. It's a digital ID infrastructure that is key to their developments, and it's called the Aadhaar system. It's an open platform, interoperable, and biometric based. It can authenticate 100 million transactions per day. And in 5 years, they've managed to bring over 1 billion people onto this database. And it is a complete game changer for a country that has been a sleeping giant, in my opinion. So how have they done this? They've introduced 4 key elements. These are the 4 key building blocks of their development. The first is an ID layer. So what I mentioned, the Aadhaar system, which is the identity that enables authentication. The second is the paperless layer, which is about electronic KYC. The third is the payments layer, which is all about real-time and electronic value payments. And then the last one is the consent layer. And this is the key part. It's all about personal data that can be shared and tapped into by a variety of companies. And I'm just going to literally 1 or 2 more slides. The reason why they have done this, the personal data layer, is because they've seen a change in business models from software that used to be sold to software that is given free. The next example is that, if you can see from here, banks have relied on fee income for many years, and they see a trend moving towards fintechs providing these services for free in exchange for the data. And that's why they see themselves in the next 5 years going from a data-poor country to a data-rich country. And my final thoughts here, so I've talked about the blurring of lines between a consumer's social life, retail life, and financial life. And all of these things are becoming reality. If you think that these things are just restricted to Asia, I would think again, because Ant Financial in particular, as well as Tencent, have already launched in Europe, and they're already starting to make a lot of partnerships. So on that note, thank you very much for listening.